pretty interesting to use in different hedging type strategies.
I want to pull this up on the screen. DFYN, and then
it's to the left of farm. It's a predictive pool or prediction.
All right, so tell us about it while I'm pulling this up.
Well, it looks like you could make directional short-term investments, wagers, bets, whatever you want to call it, on which way the token's going in the short term. What's interesting about that is it kind of creates some kind of arbing within in price correction within the overall platform. So, as we talked about last time, the volatility in these tokens, you look at DFYN, now they just launched their vaults. They launched a prediction. So they're trying to stabilize token price, and they're trying to allow individuals to arb within it. Also, we didn't talk much about Router, which is their super mesh project for cross-chain liquidity. It also ties into that, where you're going to be having to optimize price across multiple chains and try to keep the middlemen out and the front runners out and all of that. And I think a lot of that can be achieved with, innovations such as this.
So this is the predictions market, right?
Yes.
Okay. So how does this function now?
Okay. So click on let's look at the 5-minute, the top one. Just click on that says enter.
Oh, wait, I'm going to have to. Oh, no, I don't.
No, you got it.
My wallet. Cool. I don't have my wallet connected at the moment.
Yeah. You don't need it to look at it.
Okay.
So you see those are the 5-minute candles, and there's some out in the future where you can see where when the price starts moving, you could be betting the opposite side if you think it's getting ready to go up.
Holy crap.
So you got, essentially these are like little 5-minute candle market makers, where if stuff starts going awry, other people that believe in different positions, whichever it is, the 5-minute candle obviously is, instantaneous pretty much, but there's 15-minute and 60 minutes as well. So there's a whole other trading strategy within this that supports price stabilization, finding the proper price. There's just another innovation.
So you're betting on the whether the next 5-minute candle is going to be green or red. And are you betting by staking the Matic down and saying I'm in on it, or you're just saying, okay, I bet 10 Matic and
I think it's more the latter. I haven't done it yet. I just was running across this late yesterday and this morning, but it looks to me like you're putting a wager down of sorts or an investment of sorts, like Jesus. 10 Matic or 10 whatever. And, you could see this for degen and aping and stuff like that.
This is like the ultimate.
It's like mainlining dopamine at this point.
But I won 6 out of 10.
Yeah, I'm like, how long could you do that for without just cratering, psychologically? But it has a purpose, if you look at it. So it gets people in that are looking to, say, grow their stack of DFYN tokens, and they can bet on or choose direction and either increase it or decrease it. So
that's crazy.
But I would recommend anybody, I haven't done it yet, but anybody, do small amounts, please, just mess around with a couple of bucks, see what it does. Because this has a innovative sort of feel to it. Something that I might see at Caesar's Palace in Vegas or something like that.
I just did an interview with Kyle Samani of Multicoin Capital, and he's like, look, we all need to admit that DeFi is the casino, the largest casino in the world. And this is just like, okay, fuck it. This is the largest casino in the world, and we're going to make it really look like it.
Yeah. So, it's almost like a roulette wheel, red or black, but green or red. So I say use caution, obviously, with this. And it's not quite my style because I'm more the medium term guy. But I see, I'm trying, I was messing around with those leverage tokens on Binance a few months back, the ETH up and the ETH down. And I would, when I was getting a little nervous, feeling like it looked frothy, I'd load up on some ETH down. And then if it did or didn't, I either made money or just held it till it moved, and then flipped to ETH up. So it kind of seems like it's a little bit like that. Like these might be almost like function as a lever token.
And so,
But
wait, these are 5-minute candles. Do they have 1560?
yep, right below.
Got to tell you, man, I would hook up if they had more pairs. Like, I'd like a drop down of every pair possible, and I'd hook our MTF thing up to this.
Yeah,
Because if I could bet any pair and play the mean reversion on these, this could be pretty.
yeah.
Damn.
Like I'm thinking, if you when your signals are firing on, say the buy the dip kind of concept, you're triggering that signal because there's an indication it's going to revert back to the mean quickly.
Right.
So if you could couple these together, it seems to me that you could be doing, say, 15-minute candles, but then if it's going the wrong way on you, then you do the 5-minute candle, to offset it or to juice it or to hedge it, on your position. Or you could start with the 60 and then start waiting to the 15 if it's going the wrong direction. And then at the very end, that last.
You hedge on the smaller ones. Oh,
Yeah.
I like that.
So let's say you're sitting at 55 minutes on that 60-minute candle and it's not looking good. Well, then you jump into that 5-minute one and
Oof.
you hedge your whole bet basically at that stage. So, it's had some interesting things to think through. But that's hard. This is almost like high frequency in a way.
Yeah.
Because you're really going to have to stay on top of this.
Yeah, it'd be fun to automate against this, though.
Yeah. So, when you look at, again, DFYN, I find this to be another super cool innovation. And,
I tell you, I think I mentioned this the other day. I ranted a bit the other day about some user experience issues on their exchange. And within 30 minutes, I was in a Telegram chat with the executives and founders of the company going through all the things I think they should be doing. Me, I'm not afraid to rant about user experience. And I was blown away by how responsive they were. And I like their platform, and I like the fact that they're innovating, and all of the technology that they had. What I don't understand yet is they had like Route, which you were talking about, which is technology for multi-chain. One of the things I said in my little rant privately to them was, guys, your entire website is focused on multi-chain capabilities. You got to get that out there, because this is amazing that you have this tech, and people, I think that's the next wave, is all of us being able to kind of cross chains to play these games. This is really cool. This could be dangerous, for me personally.
Well, it's a risk mitigation tool. But I don't know if you're in the Telegram chat or the DFYN _HQ Telegram channel. I mean, I'm in so many.
I was in there. I don't know if I stayed in because there was so much noise.
Yeah, they it's got some high end stuff, and of course you get the regular sort of people that should be Googling first, like, how can I stake DFYN? You're like,
why price go down?
Yeah, when moon and all that stuff, but I've noticed the admins and everybody in that channel are super responsive.
Yeah, they're a good team.
Yeah, I'm really impressed at the quality of this one, and then with the vaults and with this router. I actually picked up some more router the other day because I'm in the router DFYN dual token pool on there at, like, I want to say 220% APY. Because this route stuff its token is $ROUTE. It is going to be a game changer for them, because when you see, like, another one we'll talk about next that's doing stuff between Polkadot and Cardano and I believe Polygon Matic. You have all these ones, like I believe Phantom does BSC, Ethereum, and Phantom. Polygon has bridges to a lot of different plays, obviously.
Yeah.
This has to be seamless, like, where it's, when you hit that button there, it's hitting 6 different price oracles basically, and getting you the best deal seamlessly to where you don't see it, like electricity and plumbing infrastructure.
Right.
Like, we don't ever think about, God, it took somebody all this time to build all this underwater sewage stuff. We just run the sink, flush the toilet, take the shower, and don't even think about it.
Yeah.
Wi-Fi is like that now too. Like electricity, etc. This has to be the way DeFi is.
Yep.
So I like all this innovation. I mean, I found a really cool one on another token. There we go. Look at that.
Yeah, this is their main website is all about, layer 2, multi-chain, all that good stuff.
Now that super mesh chain, it's supposedly coded and it's in security audit right now. And they just don't want to rush the audit because there's so many potential risk spots, crossing chains. Because all about the bridging issues where these less than top tier bridges are getting hacked.
Yeah. Well, because essentially there's, stuff's getting held in one spot and held in another spot, waiting for something to happen, and it's obviously a
somebody's front running it too, and things like that.
Yeah.
So you have to get some more certainty there. But still, this is a project that I was looking. I think the market cap, depending on where you look at, I think the CoinGecko has it at about 15 million. I think I read on somewhere else the fully diluted market cap might be 105 million. But that means you've got potential to really, if you follow the Matic Polygon trajectory or you follow any of the other ones, because now you're going to have this super mesh chain too. This could really get to $20-$30 in my gut per token.
Yeah.
And router trades separately. I think that's about $3.30. But when that finally goes live, sometime later next month, expect that one to really take off too. So that's why I like that DFYN route pool.
Yeah, that's nice. That's really nice.
I believe in the tech. So, in the management team. So that's kind of what the core is of the way I look at all of this is this isn't just, making bets on random dice rolls or card draws. You really have to look at the management team and the roadmap and the credibility and the security of the contracts and all of those things. And then make sound, guesses as to which you think is going to perform, just like you do equities.
Absolutely. So, no, I think that makes total sense. I mean, the cool thing about it is we can invest in these projects on a fundamentals basis in their token while we're also playing all the fun games they create for us in yield farming and prediction markets and everything else. And I think DFYN has been really creative, but also is creating some really cool tech as well. For all of us to leverage and take advantage of. Speaking of that, it's funny because I've been having conversations lately. I interviewed Zeus, the founder of Olympus DAO, the other day, and they just launched over the weekend a bonding as a service project. So a lot of their liquidity is in bonds because they're building a reserve currency. But the interesting thing is that I'm starting to feel in the interviews I'm having two things. The first is I think that projects are a little tired of zooming value and dumps, right?
Yes.
That this constant, which it not only has an impact on kind of the overall value of the project, but it has an impact on community development, which is crucial to the sustainability of a project, right? So everybody gets excited, the price is way up, you're up 500x or 50x or whatever it is, and then the big dump happens and everybody goes away and your community gets quiet, right? So they're seeing that it's not sustainable. And I just read an article this morning and tweeted about it, that they, one of the things that's happening is that all of the inefficiencies in kind of the AMM model of just constantly releasing coins to try to keep people engaged and providing liquidity for you. And so you're dumping tokens, and doing outrageous APYs is, it just makes the entire system inefficient. And the problem is that scaling the liquidity is difficult. So now there are projects coming up that are playing middlemen for liquidity providing. So they're actually combining liquidity from multiple chains so that a given exchange can provide more liquidity for a given pair and be able to convert it from other chains. So I'm not sure about the technical details of how it works, but at the end of the day, you and I have talked about this before. I don't think that the model of these giant yield farming returns are sustainable. And I also think that a lot more projects are looking at trying to build stability. Yesterday I interviewed a project called Beanstalk and put out their episode this morning. That is a stablecoin, an algorithmic stablecoin with a lending built into the model, and a really complex model. But the complexity is there because it's how they see. They've looked at all the other potential stablecoin algorithm models that have come before and have failed, and they're trying to fix those problems. And so it means that there has to be complexity in how the thing functions and how supply and demand impact the price. And I continue to interview people who are always talking about how can we make our thing stable. Obviously, a stablecoin wants to be stable, and pegged to the dollar. But at the end of the day, the desire for stability on all tokens is growing, and so I think there's going to be some changes in how projects launch and how they manage liquidity, both using bonding and other tactics. Interestingly, I interviewed the guys. It's not the right domain. I interviewed the guys at Gnosis who launched an exchange called CowSwap, and CowSwap is basically almost a peer-to-peer exchange. I mean, it's not peer-to-peer, but the idea is that they look for what they call it's called COW because it's the coincidence of once is what COW stands for. And the idea is they go out on the network in their exchange and elsewhere looking for people who are on the other side of a trade or who combined can equal a trade that they're trying to do. And they build in, so they're no longer utilizing or needing automated market makers and liquidity providers, right? Mm-hmm. They're actually matching up the trades and dramatically reducing fees. And so they're creating a marketplace of people who will handle the routing and utilizing their own algorithms to optimize the trades, and then they get a cut of the trade, whatever. The other interesting thing about CowSwap is you don't have to have any Ethereum in your wallet to swap. Oh. So you only need the initial token that you want to provide, USDC, ETH, whatever it is. Well, not ETH in this example, but whatever the token is that you have in your wallet, you can put it in there and they handle everything else in the back end because they don't need the liquidity pool and the ETH for the gas fees. It's separate and it comes out of your total allocation of tokens. Anyway, the reason they created this was they actually wrote one of the first papers on creating automated market makers before Uniswap. And they decided not to build it because they were concerned about front running. And so they never built an AMM and the model because they didn't think it would be, they thought that users would get screwed over by front running. Now they've launched CowSwap to address the problem. But anyway, I think all of this points to a bigger focus in the space on stability and reasonability overall.
Yeah, I think that, it's funny you talk about this one. I was approached by a group 2 days ago called CoinChum that I just started looking at. And the same thing. It's a peer-to-peer DEX kind of play. Okay. And so let me find it. Where is it? The browser real quick. It is coinchum.co. Got it. And I haven't dug into them yet. I just thought I would bring it up. But they've kind of done there's a private sale going on. So remember, hook up those VPNs. And,
but not Singapore.
Yeah, not Singapore. And I think these guys, I don't know, they might be HK. I think they're somewhere over there. But it's a decent-looking team. And, it's addressing a lot of the stuff that you're talking about. So, I remember when all the DEXs were around a couple of years ago, and then, all the U.S. ones, they kind of all closed their doors.
Right.
Because they didn't want to be perceived as an exchange.
Yes.
Even though we know it's decentralized, but $10 million in lawyers and fines to convince anybody of that is going to be impossible. But I think it's another interesting one, and it kind of hits that same point. Like, we know all these yields are there because they're incentivized by the VCs and the funders to create user adoption on specific platforms.
Yep.
To attract developers, to attract users, all the things that, when you look back at the old .com market, all those VCs pouring 40 million into this, 40 million into that, and it was all marketing. I distinctly remember that year when all those Super Bowl ads were bought, for 3 million a pop. And what are they trying to do? User adoption, get people awareness of the platform. Same thing's going here with the tokens. It's just interesting to do it with money to attract users versus ads. Yep. And, I kind of think this is better myself. Now, if you look at DFYN again, you were talking about startups, look at in the farm tab, you'll see like launch pools.
Launch farms?
Yeah.
Yeah.
So open that up and you'll see a Matrix ETH pool there.
Yeah, I got it.
So they kind of start with, I flipped browsers. They kind of start with, kind of incubating almost some of these plays in this manner. But this is another interesting one too, because these guys have just started digging into them, and they kind of have this nuke button where, it'll cash all your farms out to stable with one button push. Huh. So, aside from, obviously speed of chain and all of that is going to be really, really important here. But,
so you're talking about Matrix has this product.
Yeah. It's called Matrix Swap, I believe, is the let me switch back to the browser real quick. That is, matrixswap.io.
Got it.
And, it's got some pretty cool stuff in here too, some yield farms, but their main thing, I believe, is the cross-chain piece again, as well as this nuke button. And, it's just, I'm the same way. I kind of, a lot of times if I start getting nervous, or in the beginning, I would start trying to get out of pools. But then when I kind of realized that, look, as long as if you're paired with ETH, let's say, if the other token is going up fast, you end up with less of that token, but more ETH.
Right.
If ETH is, if that other token goes down, you end up with more of that token, and then it recovers. So, I'm not, to me, I don't get nervous about that anymore. I don't start pulling out. I just leave it because it's just easier to DCA it every day, with whatever the rewards are.
Right.
Versus pulling it out and then, then what do you do with it?
So,
right. That's an attractive feature here for this one. And, when I look at this Matrix ETH pool and I'm like 567%. Well, you're getting all the fee is in Matrix. It's not in DFYN, the rewards. Uh-huh. So, if you want to build a bag of Matrix, this is what you do. You come here. We got 728,000 in that pool. It's only got 13 days left on it. And then it'll reset to a new pool, or you claim it all. But, half an ETH and, whatever the equivalent in Matrix, I think it's at 70 cents or something. But, and just let it sit. And so at the end of the period, you're going to, the 567 is obviously over the course of the year. Nothing changes,
right.
You've got the same amount of money, all of that. But still divide that by 12, and you're looking at 5% a month roughly in Matrix token.
Nice.
So you either hold it or you sell it, whatever you want to do. And so these are the kind of things that are interesting because it's early. Everybody wanted Solana. Everybody's going, why didn't I do Solana now when it's like 140? And I tell that story. I don't know if I've told it here yet, but, I was in Solana at like 1 and out at 12 and in at 17 and out at 25 and in at 45 and out at 77. And now I just have nothing in it. But I have, I go, maybe I should have just held it the whole way. But, I don't really do that. So,
well, look, at the end of the day, none of us know what's going to happen. So,
yeah. So I always kind of, in my mind, I say that whatever the 12X at the beginning, I reinvested that in something else that went up and then I sold. So, I really haven't had much just go to nil at this point.
Right.
But all of these features are what's going to advance this space. And of course, yields will go down over time, but there will always be the early stuff and the early new chains where you'll, still get, opportunities.
Yeah.
So, I'm not quite sure yet which way it goes. Now, of course, we know that there is a regulatory issue looming up in the U.S. on this.
Yep.
Where they're trying to load up some KYC and things like that on the U.S. versions of some of these platforms. And interestingly enough, quite a few are in the U.S. I didn't realize that. So, I don't know how that affects it at that point. I don't think it changes anything because I think most of us, I KYC'd on Coin Metro.
Right.
I KYC'd on Coinbase.
Yeah.
Just because you have to.
Yeah.
And those are centralized exchanges. So, it's not like you're giving your data away to someone that, you don't know who it is.
Yeah, exactly. Exactly.
So I don't have a problem with that kind of stuff. But the DeFi, I think, these APYs scare people. It looks like bullshit.
Yeah.
And,
well, I remember when you and I first started diving into this shit, you were like, dude, I'm doing this. And I was like, oh my God, first you have to explain this to me, man. How does this work? And then I know I sat on it for another 4 or 5 days just going, oh man, this can't be real. This just can't be real. I'm going to lose everything I put in here.
Yeah. And so, we all hear about the rug pulls and all of that. I mean, most of that seems to go on, mainly, and I'm not picking on them, but mainly BSC for some reason.
Yeah.
But like a lot of these platforms are clones of Uniswap or SushiSwap or something like that. And that's all, if I'm not mistaken, open source code.
Yep.
So it's all out there. And, so rug pulls to me, I don't even know if they can happen on some of these DeFi exchanges at this point.
Well, yeah, if everything happens on that exchange, then like at DFYN, right? If you're in their pools and you're in their yield farms, the project that you're in, like Matrix or whatever, they don't have control over those tokens. So they can't rug pull you. Now, the project could rug pull people on their website or somewhere else. And then that's obviously going to destroy the price. But when you're in DFYN, you're trusting the team at DFYN not to screw you, right? So,
yes.
I think we've gotten better and better at kind of making those determinations of the projects we think are in it for the long haul instead of like a quick score. So,
yeah. And so, and I look at human nature too. And so if there are bad actors there, look at DFYN at 15 million market cap. I have no indication that this would even happen, but the incentives aren't there.
Right.
If it's $1 billion and somebody's got an issue, that kind of stuff happens. So, sorry, I thought I got muted. But to me, I all right?
Yeah, I'm choking on my water. It's a genetic thing.
But that's the thing is you just pick the ones that have stability. One thing I've been meaning to mention too of our listeners is that, if you're going to do this, there's some, and I don't know if this is more for the newbies and the pros, but, there's some OPSEC stuff that you really should take in mind just to avoid these types of problems. The standard package is, get an email address on protonmail.com. It's Swiss encrypted email.
Yep.
It's they can't get IP logs. They can't get anything. Nobody can get it. So you use that to sign into these wallets and sites so nobody can, compromise your laptop or computer. And then also, get the VPN. There's 3 or 4 out there that are really good. I'm not going to say the one I used for OPSEC purposes, but it's one of the top ones.
Give us the affiliate link, Joe. Come on.
But it's like this Proton Mail here. I've used it for 3 years. You can host domains there. I just do the Proton Mail domain because I don't care for this stuff. But you could have everything there, and it's out of the reach of the bad actors. And then the other thing is Telegram, of course.
Yep.
Sometimes that, people outside of crypto, that don't use messaging services, they're comfortable using WhatsApp and iMessenger, which is, similar, but then, they pick on Signal and Telegram. But, any of those are good for messaging people, secure chats, all of that, just so that, these hackers these days, they really know how to get in there. And you see it all the time in Telegram where you get DM from people that pretend to be a customer service group, and they're not. Yeah. And then finally, whenever your wallet is, that secret phrase, recovery phrase that you can use anywhere in the world, you never ever share that with anyone.
No.
And you never type it into your computer even.
Yeah.
You write it on a piece of paper and a couple of papers and lock it somewhere.
And get you one of these. This
yes. Is that a
hardware
ledger?
wallet. Yeah.
Yes.
It's a ledger. Yeah.
Yeah.
Get you a ledger and actually use it, which I've only recently started doing. Thankfully, just decided, I read an article and got scared. So
yeah, I know that happens. I periodically have to go into like my browser wallets and just start moving stuff off there to the ledger because, it's kind of hard though, because you're on Ethereum and you're like, wait, how much to move it to there?
Yeah,
like,
exactly.
Is it really worth it? But again, that activity, housekeeping, is always best done, around 7 p.m. Friday to 6 p.m. Sunday. You find like the best gas fees. So that's just basic crypto safety from the bad actors.
Right.
And, just be careful and do your due diligence.
Yep.
Just wanted to throw that in just so that
absolutely. No, I think that's great. And look, I mean, the way I look at projects as well, I mean, I'm fortunate because I'm actually getting to talk to a lot of the people that I'm investing in. But, some of the things I look for are, did venture capitalists invest in this project, right?
Yeah.
Were there other protocols in the space that are engaged with, partnered with, and investing in a given project? I'm actually not opposed to people being anonymous. And frankly, I understand why they are. There's any number of reasons. They're worried about being targeted. They're worried by the government or by people that would take their money, et cetera, et cetera. So, but there are ways to make sure, like two of my favorite projects, Alchemix and Olympus DAO, both are anon-led, right? But those are projects where they communicate regularly with the community. There were big name people involved and engaged and did due diligence on them before they invested in them. There is a presence and a community that's engaged. The smart contracts have been released and they can't mess with them anymore. And they've had multiple audits and they've got good rankings by DeFi safety. So there's any number of things you can be looking at to make you feel safer about a project. And I think that's important. One of the things that I loved about DFYN is they are very close with the protocol. With the Polygon team.
Yes.
Right. So that immediately gave me a lot of trust in that project, despite the high yield rates. I was like, okay, this is a project. They're known. They put their faces out there. They communicate, and they are partnered with Polygon. And I like the Polygon team. So absolutely, it's important.
Yeah, it's trust. I mean, it's like you said, it's knowing the people, whether they're anonymous or they're doxxed, and if they're engaging, do they have a plan, what's going on, and then knowing the code.
Yep.
Not really my strength, but plenty of people I know, Solidity guys, etc., that go in there and just do the code audit themselves, real fast to look for. There's some obvious things they look for, and getting a blessing from them too.
Yep.
So, I can cover business strategy, tokenomics, which is like cap structure, cap chart, cap tables, and market and features. And you got product and, a whole bunch of other domain expertise in the people and word of mouth. And are these good guys? And, someone that we know will say, oh, yeah, I've talked to them a lot. They're good. It's things like that was where our reach is. It's our network.
Yeah.
So, I think
coming next week, our first package of $4,000 a month subscription reports rating DeFi projects.
Yeah, send the ETH here, please. No, but
I think you just created more work for us, Joe. I think you just created a product.
Yeah, well, it's like, look, I look at this Matrix ETH pool. I'm not in it yet, but I'm going to be in it today.
Yeah.
Just because I like the project.
Right.
And, anybody around privacy, a big proponent of data. We all know about the data issues with, tech companies. And, God, I keep telling my, those younger than me that, they've been building book on you for 10 years.
Hell yeah.
When you've been swiping that hot or not button forever or something else, what do you like? That's all psyops. It's psychological operations. They're just segmenting to the individual level now, and they're able to because of processing power. So you got to protect that info, because they'll eventually be like, okay, whoever could be trading in DeFi is also probably doing this, or 80% of the people that do this are doing this. And so, it's just kind of gets a little creepy for me. So
totally agree.
But, we'll think about that product idea, because I do want to, I do think as this format evolves, because I can see we're already over because we just blab, blab, blab. That,
well, we could do like 3 hours.
I know. This should be like a reality show instead.
Okay, we're going to start a Twitch channel, and you and I will just go all day with our screens up bullshit.
Yeah, just talking trash. But, it's like, this is real opportunity here for people. I know certain people have certain philosophies, and, I'm a man of the people myself, but I tend to also understand the institutional perspective. And so, when institutions are in, the people do really well. Because then you bracket it. It's kind of like we talked about efficiently setting price, or price efficiency. Just looking at the ETH order book the last couple of months, you could just see it just gets bracketed in these ranges, like bid-ask ranges. Now, sure, they're 8 percentage point spreads, but it just goes up and down, and it's held in that channel. That's just because of mature order books across all the exchanges, which is a good thing.
Yep.
So, now it kind of starts behaving more like an equity, because why do equity prices move? It's because of changes in cash flow. And, because that's how they value equity. Here, discount cash flow. Here in tokens, it's not tied to cash flow. It's tied to user adoption and usage and all of that. But when you start bracketing the order books like that, all of a sudden, like to break through that lid on ETH, I think I saw this morning when I was looking, maybe like, 40 on Binance, 40 million, maybe on the 3,000 line or 3,200 line. Yep. But then I saw like another 80 million on the 26 to 2,800 price line. So, and then you see these big dumps. People come in and dump like 40,000 ETH.
It's crazy.
It doesn't shoot through those walls because there's so many other buyers going on that, we can't see in the order books.
Yeah.
So to me, that's a mature thing. So what makes ETH bump and go up through that? It's something like, hey, man, now it's burning them. It's deflationary. Supply is getting smaller.
That's right.
It's like, wow, I wonder if it could get as high as Bitcoin. Things like that. And then all the commerce is actually going on. So now we're dealing with real market events that change things. And, like when all the China FUD comes out, whatever they're talking about, the reason it changes the pricing is, because everybody thinks, oh my God, they're all going to dump now, which they're not. But then it also is that everybody counts those 1.4 billion people as, they were way ahead of us in fintech at the beginning, but they're users.
That's right.
So, if some percentage of that, maybe it's, 200 million, 100 million, that just blows the forecast out of the water. So it's things like that. So now we're getting a little more mature in some of these big coins. You want to make the really good money, you have to go find the new stuff.
Yep.
And so that's just my feeling. All good things, all good evolution in the market.
Now we're totally. Look, I'm so in this now. It's just, I think all of these things are going to lead us to something that will be palatable to the rest of the world, or that's not in the crypto. And I think we've got a good thing going.
Yeah, me too. And I think that this is one, it's not too late. But you have to think, if you're just coming in, with placing some money, just, play it smart.
Yeah.
Don't drop the whole thing on one, stick your toe in first, get comfortable before you start committing more, like you would in any equity. Yeah. I don't really trade equities these days other than index, but, it was the way I always did it. I came in, I said, okay, I want to invest X in this. And I dropped in, half the money. And then if it drops, you DCA. So you got many more opportunities here to do that kind of thing in crypto. But you can also, just like unlike the startup market where you got to get into these, private placements and things like that, where there's no liquidity.
Yeah.
You can get out anytime with these, So it's a lot of good things here that I think could parlay over to the equity side. I mean, I thought what CZ, what he got in trouble for, what was pretty cool was those synthetic stocks
Oh,
that
I
you
know.
could trade, like the Tesla one
I'm
and a few
dying for
others.
that.
I think that's brilliant.
I'm dying for a full-blown synthetic. I mean, there are a couple of synthetics is one in DeFi, and there's a couple of others that are doing synthetic stocks, but I want like a full exchange worth of stock listings, right? All of NASDAQ, et cetera, because that gives us, I mean, on a personal, selfish level, that gives me an opportunity with our MTF indicator to go in and be doing crypto and stocks at the same time. And anybody that combines those into one platform, I'll live there. So,
well, it could have another benefit too. It's that, I mean, I think where that market has to get to is if you're going to do a synthetic on Tesla, you have to own the underlying shares. I don't think you should be able to nakedly
really
do it. That's my feeling. So if you're CZ and you're going to do 1 million synthetic Tesla shares, why not buy 1 million shares of Tesla?
That's interesting.
Something like that.
I definitely think you could do that. I personally don't mind trading it without. I mean,
I don't either. I'm just saying
for everybody else, they should really have those shares in house.
Yeah, because you're not gonna. I think that's what I would say if I wanted to get the regulators.
Yeah, exactly. Now, that's actually a good strategy for him. That would have made a lot of sense.
Yeah, but Phantom, I think, is doing some synthetics too. They have all those F tokens, F something.
Yeah.
And I haven't really dug in deep on that. That was what attracted me to them in the first place was, oh, wait, synthetic tokens, synthetic assets. That sounds interesting. But I haven't, gotten that far on them. So there are groups doing it, but they'll do like, FBT. It's not just wrapping it like the others.
Yeah.
There's something about spontaneous generation, I guess we call it. I don't know what the right word is.
So do you think we'll have a synthetics exchange that'll have Matic Tesla pairs?
I could see something like that. You know? Or why not, the S&P 500 index?
Yeah.
Paired with, USDT.
Exactly.
Or paired with something else, ETH. I mean, BTC is really originally a BTC USDT pool or a pair. So, of course it has a bazillion other pairs now, but, there are definitely some interesting things you could do with that.
Yeah,
that would help liquidity on the equity side too.
Yep.
And bring new people into the stock side, if that's what they're into.
All right, let's wrap it up because I really wish you hadn't shown me this prediction market thing because I'm about to go deep dive before my next interview because I want to take a look at our MTF mean reversion line and see if I can start playing these on 60 Minutes. So
yeah, well, let me know how that works out.
Yeah, I definitely will.
We'll talk about it on Friday.
Yeah, perfect, man. All right, have a great afternoon. As always, lovely chatting with you.
Absolutely, Brad. Talk to you soon, man. Thanks.
All right, bye-bye.